A volatile day on Wall Street as stocks fell and rose. During the first 30 minutes of trading, the Dow dropped more than 1,000 points. And in a span of 1 week, we watched all of the Dow's gains for the entire year vanish. So what might this mean for our economy going forward? For more, we welcome to the anchor desk, I call him the other JD, but he's the real JD, James Dale Davidson, best-selling author and investor. It's great to have you back on Newsmax Prime.
My pleasure.
Well, we take a look at this today, and it is just, it's scary, scaring a lot of people.
Well, it should be scary. If you're not scared, you're not watching. I think since the last time I was on Newsmax TV on the 11th of August to discuss the Chinese devaluation, which was a small step, I said it was only the beginning of a major change that was going on. And since that time, as I told you before we started, $5 trillion have gone to money heaven, which is a significant change.
$5 trillion to money heaven, but does that make for an economic hell here on Earth?
I think what we're seeing, if I could say it this way, is a rerun of 1929 with the crash, the main crash falling in Shanghai rather than in Wall Street. Because if you look back at these economic crises and stock market collapses that are associated with depressions, the first stage is what we've already seen, which is the big fall off in commodity prices. If you go back to the 1929 depression, it didn't start in 1929 in all the countries. It started in 1928 in Australia and in Argentina and Brazil, Uruguay, in Finland, Bulgaria, and in Germany. The depression had already begun by 1928. And then we had a huge, huge sell-off in Wall Street, which sort of rang the bell so that anybody who was not watching then knew that we were in deep doo-doo. And we're into the same kind of cycle, I believe, as it relates to the collapse of world demand, the fact that we've had commodity prices plunging. You know, if you go back to December of 2011, the price of iron was $190 a metric ton. Now it's down to $44. We remember the price of oil being up at $140 some dollars, and now it's below $40. And this is a very significant indication of weakness in the global economy.
Well, a lot of people at the pump say, hey, lower energy prices, that should be a good thing for the economy.
Well, it is and it isn't. It is a good thing if you're buying gasoline. It is not a good thing if you're pumping energy from the ground. If you're looking at the employment numbers in the United States, where did employment grow during this so-called recovery that we've been living through for the last 6 years? It grew in areas where they were drilling oil. It didn't grow anyplace else. And this is probably not a coincidence, because there really hasn't been that much vigor in our so-called recovery, and I think probably it's going to go back down again.
Donald Trump says the U.S. should decouple from China. What would that entail, and would that be the right move for our economy?
Well, I don't know. Donald has a lot of interesting ideas, and he's a friend of mine, so I'm not going to be critical of Donald. I would say that I think that it's hard to decouple two big elephants in a bathtub. You know, it's not. The Chinese are the second biggest economy in the world, and they represented a big part of the demand for raw materials, and they kept the GDP of the world turning over in the last few years, because our growth has been negligible, to put it kindly. If you extract
anemic, to put it realistically.
Yeah, if you extract out all the statistical waffles from it, you don't even have enough to put syrup on. It's
well,
really bad.
And this is not exactly a sweet subject, but I have to ask this. With the turbulence on the stock market, does it raise enough doubt about the economy to hold off the Fed from taking up short-term interest rates in their upcoming September meeting?
Well, Larry Summers certainly thinks so. He's been blowing the horn saying that they're making a terrible mistake. I think that, you know, they made a terrible mistake when they went into this invisibly low interest rate policy, because they really destroyed the market's ability to discover prices and to price assets. And we see now with another change that's going on, which is the drop in the value of high interest debt. The so-called junk bond indices have plunged in value. And this is an indicator that usually leads the rest of the market, because people who have put a lot of money into sensitive junk bonds, which are basically instruments that people probably can't pay in the first place, but it's a closely run thing.
Ooh.
So they're like canaries in the coal mine.
Canaries in the coal mine. It's not exactly a pretty picture, but James Dale Davidson, we thank you for coming and helping us understand what's going on today.
My pleasure.
Now, the cap that Donald Trump's been wearing on the campaign trail and at various stops, blazing out his Make America Great Again slogan, has become a sensation, and you can get your very own Make America Great Again cap free with this offer. Just pay shipping and handling. Go to newsmax.com/TrumpCap or call 1-800-933-8396.